Alexander Green has just created another stock teaser to get you to buy his newsletter. Now, he's claiming he found the next magnificent 7 companies that can turn your $1,000 investment into over $1 million in less than 6 years. He won't tell you the names of these stocks unless you pull out your credit card and buy his newsletter. Lucky for you, I'm here to save the day. Green accidentally left too many clues in his presentation, and I was able to figure out what all 7 of these stocks are. I'll reveal them all to you for free if you watch this video to the end. Let's get right into it. The first stock is from a company that Green calls the AI CPU developer that could be the next trillion-dollar company. ARM Holdings, a British semiconductor and software design company, is renowned for its innovative technology used in mobile devices, embedded systems, and increasingly, in data centers. Founded in 1990 in Cambridge, England, ARM's processors power billions of devices worldwide. Recently, the company has attracted attention for its potential acquisition by NVIDIA, a move that could reshape the semiconductor industry. Despite this, there are mixed feelings among analysts regarding its current valuation. Analysts are bullish on ARM, giving it a strong buy rating with a target price of $106, slightly lower than its current price of around $114. While analysts are optimistic about ARM's future, there are concerns about its current valuation. Recent earnings reports have been positive, with an EPS of 0.36 beating expectations and quarterly revenues hitting $928 million, a 46.6% increase from last year. ARM's expansion into AI is seen as a smart move that could give it an edge in the growing AI market. However, the stock's performance will be closely monitored to see if it can meet the high expectations in a competitive semiconductor market. Green calls the second stock that he's pitching a company that's reinventing the internet with AI. He's talking about Cloudflare, which has ticker symbol NET. Cloudflare, founded in 2009 and headquartered in San Francisco, California, is an American web infrastructure and security company. It provides content delivery network, CDN services, DDoS mitigation, internet security, and distributed domain name server services. Cloudflare's stock has been up and down a lot recently. Even though their revenue grew substantially, reaching $1.3 billion in the year ending March 31, 2024, their stock price is around $73 in late May 2024. Investors are worried because Cloudflare is spending a lot of money, and there are doubts about how much more they can grow. In the first quarter of 2024, Cloudflare made $378 million in revenue, up 30.4% from the year before, and their earnings per share doubled to 0.16. But when they said how much they expect to make in the next few months, investors were disappointed, and the stock price dropped by 12%. Experts have mixed feelings about Cloudflare's future. They say, hold for now and think the stock could go up to $135 or down to $50. On average, they think it could go up 25.5% from where it is now to $92. Cloudflare is important in the cybersecurity and cloud services market, especially with new technologies like AI and edge computing. But some investors worry that the company is spending too much and might not make as much profit in the future. In short, Cloudflare needs to watch their spending and keep growing if they want their stock to do well. The third company that Green talks about is Exscientia. Exscientia, headquartered in Oxford, United Kingdom, is a pharmaceutical technology company that leverages artificial intelligence, AI, to enhance drug discovery and development. The company's AI-driven approach aims to streamline the process of identifying and designing new drug candidates, significantly reducing time and costs compared to traditional methods. From an investor's point of view, Exscientia has seen mixed results recently. In the first quarter of 2024, they reported earnings per share of negative 0.21, which was better than the expected negative 0.37. However, their revenue of $6.7 million was lower than the expected $7.4 million, which worried investors. The stock is currently trading at about $4.69, with analysts saying it's a buy and predicting it could go up to $9.75, which is a potential increase of 108%. Analysts' price targets range from $7 to $13, showing a lot of optimism about Exscientia's future. Financially, Exscientia is facing some difficulties with a net loss of about $181 million in the past year. Despite this, their current ratio of 6.3 shows they have enough money to cover their short-term debts. There's also a class action lawsuit against them for securities law violations, which has made their stock price unstable. Investors should keep an eye on this lawsuit, as it could affect the stock's performance. Stock number 4, 10x Genomics. Founded in the United States, 10x Genomics is a biotechnology company specializing in developing advanced genomic solutions. Their primary focus is on creating technologies that enable researchers to understand complex biological systems at a deeper level. The company provides products and services for single-cell analysis, spatial genomics, and immune profiling, allowing scientists to examine the genetic material and molecular features of individual cells and tissues. With a strong emphasis on innovation and cutting-edge technology, 10x Genomics plays a crucial role in advancing research in fields such as cancer, immunology, and neuroscience. As of May 2024, 10x Genomics has seen a big drop in its stock price, falling from $55 to about $22, a nearly 60% decrease. Despite this, people are still interested in the company's future. Analysts are mostly positive with a moderate buy rating. The average price target for the next 12 months is around $48, which is more than double the current price. However, price targets range from $26 to $75, showing that expectations vary widely. Financially, 10x Genomics had $141 million in revenue in the first quarter of 2024, slightly below what analysts expected but still strong. They're known for their innovative products, like the Visium HD spatial gene expression assay, which are expected to keep them growing. Their balance sheet looks good, with a high current ratio of 5.22, meaning they have enough money to cover their short-term debts. But they're not profitable yet, with forecasts predicting they'll lose money this year. Overall, while 10x Genomics might have some ups and downs in the short term, many see it as a good investment for the future. Stock number 5, Symbotic. Based in the United States, Symbotic is a robotics and automation solutions company focused on supply chain and warehouse operations. They develop advanced robotic systems and artificial intelligence software to optimize the storage, retrieval, and transportation of goods within large-scale distribution centers. Symbotic's technology aims to increase efficiency, accuracy, and flexibility in warehouse management, thereby reducing operational costs and improving overall productivity for their clients. As a leader in warehouse automation, Symbotic's innovative solutions continue to attract significant attention from investors and industry experts. In 2024, Symbotic has experienced notable volatility. Starting the year at $49, the stock has since dropped by 15% and is now trading around $42. Despite this, the company's financials have been strong, with revenue of $424 million for the latest quarter, surpassing analyst expectations and showing a 59% year-over-year growth. Analyst opinions on Symbotic's future are mixed but generally positive, with a consensus buy rating. Price targets for the next 12 months range from $40 to $70, averaging at $55, indicating a potential 33.1% upside from current levels. With a market cap of approximately $24 billion, Symbotic has impressed with its AI-driven warehouse automation solutions, drawing significant investor interest. Nevertheless, Symbotic has encountered challenges, including lower-than-expected earnings projections for the second quarter, leading to an 18% drop in shares. Despite this, Symbotic remains a dynamic stock with considerable growth potential, driven by its innovative technology, albeit with risks inherent to high-growth tech stocks. The sixth company, according to Green, will protect us from the potential doomsday scenarios of AI. You know, the AI robots rising and taking over the world paranoia. CyberArk software, originating from Israel, specializes in identity security and access management. The company provides solutions designed to protect organizations from cyber threats by managing and securing privileged accounts, which have extensive access to an organization's systems and data. CyberArk's products include tools for privileged access management, endpoint privilege security, and secrets management, all aimed at safeguarding critical assets from internal and external threats. With a strong focus on cybersecurity, CyberArk has shown solid performance and remains a prominent player in the industry, attracting positive attention from investors and analysts. In 2024, CyberArk software has performed well, with its stock price rising by over 10% since the start of the year. As of late May, the stock is trading around $237. The company's first quarter results for 2024 were impressive, with earnings per share reaching 75 cents, much higher than the estimated 28 cents, and revenue hitting $221 million, surpassing the forecasted $213 million. Analysts view CyberArk favorably, giving it a consensus rating of strong buy. The average 12-month price target is $267, indicating a potential 10.7% upside from the current price. Price targets vary among analysts, ranging from $175 to $317, reflecting differing opinions on the company's future performance. Financially, CyberArk is in a strong position, with a net cash position of $55 million, which supports its ability to invest in growth and innovation. The company's market capitalization is around $10 billion, and it is expected to continue to grow its revenue, with forecasts predicting an increase from $958 million this year to $1.17 billion next year. Overall, CyberArk's strong financial performance, positive analyst ratings, and solid market position in the cybersecurity sector suggest it is well-placed for ongoing growth. The last stock is what Green considers the best AI stock for 2025, and it's CRISPR Therapeutics. CRISPR Therapeutics, originating from Switzerland, is a biotechnology company focused on developing transformative gene-based medicines using CRISPR/Cas9 technology. This innovative approach allows for precise editing of DNA, enabling the company to target and modify specific genetic defects that cause various diseases. Despite facing some financial setbacks, CRISPR Therapeutics remains a leading player in the biotechnology sector due to its pioneering work in gene editing. CRISPR Therapeutics is facing some trouble in the stock market. In the first quarter of 2024, their earnings per share came in at -$1.43, a bit lower than the expected -$1.42. Their revenue for the quarter was only $504,000, way below the expected $28 million, missing the mark by 98%. Despite these financial hiccups, the company is still a standout in the biotech world thanks to its groundbreaking work in gene editing. Analysts have varying opinions on the stock, with a consensus rating of hold made up of 8 buy ratings, 7 hold ratings, and 2 sell ratings. Investors should carefully consider CRISPR Therapeutics' potential for innovation and its strategic partnerships alongside its current financial ups and downs before deciding whether to invest. Now, if you found this video valuable and you're interested in building long-lasting wealth, I have just the thing for you. Unlike digital currencies like Bitcoin, which are based on pure hype, gold has been valuable for literally thousands of years, and many investors even call it God's money. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. If you want to learn more about how gold can protect your retirement savings, I have a gift for you. Just click the link in the description to receive a completely free gold IRA guide.